All right, traders, what's up? Jamie Saettele here, and it is 11/11, Veterans Day here in the U.S., known as Remembrance Day in other countries. And I got a little nice T-shirt on here for that. I don't know if you can see it, but I don't know. Anyway, so let's get to the business at hand. All right, so I'm not going to lie. It has been a difficult trading environment, at least for me, over the last couple of months. So let's just kind of recap what had happened, kind of basically over the last year, right? So it was a clear, easy dollar or call that the dollar was bottoming back early in the year. I mean, you could not find a dollar bull anywhere. And we ripped and we ripped and we ripped into late September. Okay, at that point right here, we were getting very close to levels where we kind of wanted to think about going the other way. And we did. That drop, I thought, was enough to say, well, we've put in the next dollar high, right? We had what appeared to be a little impulsive decline. We then had last Friday, if I zoom in on this US dollar chart, by the way, this is an index that I love to follow, right? As those of you that have watched these videos before, as you know, this is US dollar, USDOLLAR. It's an index. I actually don't trade it, but I find it very useful from a an analysis standpoint. And what it is just a quarter each of Euro, Pound, Yen, and Aussie. So, you know, it's the kind of the foremost traded liquid currencies against the buck. And it offers just a really solid, you know, kind of general dollar view, right? Support, resistance levels, and pattern, and all that good stuff. So, you know, nowhere can you see that, you know, as well as on this chart, and the way that these levels have worked out from this pitchfork goes all the way back to December 2016, right? Okay, so last Friday we had this NFP move here, spike, did not take out the highs, and then reversed lower big time, and then we had a pretty good down day on Monday in the dollar. I was like, well, that's definitely it. We are headed lower in the buck, right? Well, yesterday happened. Okay, we had a huge move higher in yields. I think we had a crappy 30-year auction. We had obviously the CPI number before that, but even the CPI number, actually, if I go to an hourly chart, here's that CPI number right here, right? We actually faded off of that. And then after that, it was just like off to the races. So, you know, is this one of those kind of screw you, you know, take out whoever is trying to short the dollar and then head the other way, which is lower? One of those, maybe, I don't know. Or are we just about to go on a freaking dollar tear? Okay. Well, I don't know the answer to that. I'm not going to pretend to know. I will say that we are at huge, huge levels. So to explain what those are, and it's not necessarily right now. It could be a little bit higher, but like not much. So for one, if you just look across the left of this chart, right, you can see a host of former highs and former lows. Okay. So like right here, this is back support from 2020, Jan 2020. Obviously, you had that spike March 2020. We had a low here in June of 2020. We have the high here in September of 2020. So we've got a lot going on from a levels standpoint. Okay. We also have, this is this line here looks like it's coming out of nowhere and it's totally random. It's not. It is the 25 line. This is our pitchfork, okay? It is halfway between the center line and the upper parallel. So oftentimes you will get decent reactions at that level. So we're there now. We actually just got there today. Also, we have, if we were to draw a bullish channel, right, from that Feb low, that high, okay, or that upper channel line is just higher. So again, a wee bit higher. Maybe we go for it tomorrow, whatever. All right. So the point of this chart and going over this chart is that I want us to know, or want you to know, we're at a big, big spot. When we get to these big levels, right, just because you're at a level doesn't mean that you have to reverse from that level. You could go right through that level. However, one of the things I like to do is when we get to these levels is I will bring up Google News, right? And I will check out news headlines. You don't even need to read the articles, okay? So let's see here. You want to see if we have any what I call extreme language, right? So once you start to get, and my point, we really don't actually. So maybe we need another day or two or something of up before we start seeing stuff like that. I don't know. But dollar climbs, not extreme. You want to see stuff like dollar soars, dollar rockets, dollar. The best are when you get predictions in the headline, right? Like dollar projected, forecasted to continue rallying, something like that. I don't know. Okay. Really don't have anything like that. We've got dollar climbs from Reuters, dollar rockets from Reuters, actually. So there is one up there. However, you would like to see it be like the one that's been read the most. And it's not. It's actually down here a little bit. So we do have something. But again, you'd like to see more. All right. So maybe we're getting close because we do have a dollar rockets going on. But again, you'd like to see a little bit more in terms of sentiment, extreme language, and all that good stuff. All right, so let's move on to our individual currencies, markets, and all that stuff. Okay, so here is the euro. We had that reversal last Friday. It was textbook. I was like, man, this is perfect. And it was not to be. So what about now? Well, I wouldn't be doing much here. You can see this high here from June of 2020. That's a level to keep in mind. It's like 1420s. And if you just draw a line here off of lows back to June of this year, you can see that that's going to cross there over the next couple of days. So I would keep that in mind. But you know that if you get down there and you get a reversal or something, maybe you can try to pick some up. This is just where my head's at. But clearly right now we don't have any reason to be long euro. We are getting into levels again that could be interesting for support, or proposed support, I should say. You had this big high here from March 2020, right? So we're right there, but we're not holding it. So really nothing to do as far as euro is concerned at this point. British pound. Frankly, it looks like, oh, I shouldn't say that. It looks like crap. You've got this double top, then this series of lower highs. Pound, this is one of those like where it's like little, lows, highs, kind of choppy, and then all of a sudden it just falls out of bed, right? I will note that the level to pay attention to over the next day or two is probably this channel line here. And that's going to be like 133, let's call it 33.20, 33.30. Maybe you bounce from that. But if you cut below that, that would trigger a kind of a crash type setup actually in pounds. And it would look like this as far as how to trade it. You'd be looking for a drop, okay, and then a bounce to come back and test it as resistance, and then after that, who knows? But that is a crash type setup when you have a channel that's well defined, right? And then the market breaks the lower channel line. You'd be looking for resistance from that former support line, right? That's polarity. That is former support providing resistance, and vice versa, and all that good stuff. Sticking with our European FX, this is actually, I didn't pay enough attention to it, obviously, but dollar Swiss seems to have been the tell during all of this. So this is a channel in dollar Swiss, and if you were with me a week or so ago, maybe the last 2 weeks, when we looked at these charts, we did note that this was a channel down here that we should watch for support, with the reason being is that you had the center line of that channel was perfect resistance on several occasions this year. So when you see something like that, you expect a lower parallel to provide support, right? Even though we only had 2 touches on this line and not a third, and the textbooks would tell you that it's not a trend line until you have 3 touches and all that mumbo jumbo garbage. However, this told us to anticipate essentially a hold, and indeed we did. So let's zoom in a little bit on this and see if we can come up with some sort of a setup, and indeed we can. So this was a chart from last night's post, where we were thinking maybe we'll trade up to 92.20s or so and pull back, and we actually are pulling back a little bit here today. So if you want to align, or this again, this is something to keep in mind, but if there is going to be a bigger dollar move to the upside, then a pullback here should probably hold the top side of this channel, right? We actually don't need that anymore. And that would be just the top side of this line. So, let's call it 91.60s down to 91.50, depending on when or if we get there. So that's something to keep in mind for a setup over the next couple of days in order to align with dollar strength if indeed we're going to extend higher. Again, it's something else you're going to notice, by the way, in all these charts, is there is like not at all a clear theme or narrative when it comes to the dollar right now, at least the way I'm looking at things. Sometimes there is, and that tends to make it a little easier. Right now, though, we're all over the place. Like, there's setups that look like dollar bulls, and there's setups that look like dollar bear setups. And that's one reason why you kind of like just to trade the market based on its own technical merits, right? Rather than trying to so-called, backdoor into a trade because this says dollar bull, therefore I'm going to go trade this other currency from a dollar bull standpoint. Well, maybe dollar Swiss is bullish, and maybe Kiwi dollar is bullish, as we'll see here in a second. Maybe Kiwi Swiss is a trade. Who knows? But yeah, that's why I like to trade them all differently. If I end up in a cross trade, so be it. Or a non-dollar cross trade, so be it. All right, so on this dollar Swiss trade, we just said 91.50.60. Pay attention to that. The big level here, though, is going to be this trend line back to April 2019. And that's all the way up near 93.50. So, if we get up to that level, pay attention, because a break there, and I mean, we're talking huge squeeze higher, but that again is off and thinking way ahead here. So don't focus too much on that. Just pay attention to these levels down here, 91.50.60. All right, let's stick with Europe. Go to dollar Swedish Krone, Krone, and you're going to see with these Scandies, the Scandinavian currencies, knocking SEK here. They actually, you can make a case that these are super crazy bullish. So again, the 200-day average hold. Okay, we've got this series of higher highs, higher lows. albeit barely. And you can see here the drop from up here is 2 equal legs. Again, there's just a lot of confusion in the market right now. Like euro's at a new low, SEK is not, but this, you could make the argument this is a super crazy bullish setup for dollar SEK, right? So keep an eye here. If we trade to new highs on dollar SEK, then we're in kind of like rocket mode. Dollar NOK is even better looking from a setup perspective. You can see the 200-day average over the last several years has been an incredible pivot in terms of providing support and resistance, and saying it's time to position for a move in that direction. Well, we just broke a little trend line here, so this is why I'm following dollar NOK so closely, because if you pull back, you're going to want to watch for support from the top side of this line, this blue line here, right? And that's right at the 200-day average. So focus on dollar NOK. Kind of I take a look at it at the end of each day. For a possible buy back near let's call it 854.50s or so. That would be a level to keep in mind there. Okay. Moving on to, I think we've done most of Europe, haven't we not? I think we have. Let's go to some commodity currencies. All right, so this is the shorter term chart. It's a daily chart, but this is what I'm looking at on a shorter term basis. And man, in hindsight, it's like the clearest setup in the world, right? And this is where you get in trouble, and I got in trouble doing this too last week or over the last couple of weeks. It's like if we go back to that US dollar chart, right? I was like, well, we're coming from resistance, so therefore the dollar is a bear. Wrong, right? Aussie traded up into massive resistance from former lows, the 200-day average. We had all these charts too. I published all these charts, right? And still didn't really do anything about it. And we've collapsed, okay? Instead, I was like, oh, we'll pull back and then we'll go higher because the dollar's a bear. Wrong, right? Trade each chart based on its own technical merit, not what you think is happening because of one chart says one thing. The other chart might be totally different. Maybe you're seeing it wrong, right? Anyway, looking at this chart near term here on Aussie, I'm looking at like 72.40 is maybe a bounce level. But if you want to align with downside, which makes sense here, given, again, this is going lower, and this is a 200-day average, and we failed at it, and all that good stuff. 70, let's call it 73.90 to 74.20, where the circle is. That's going to be possible resistance, especially 73.90. You can see here the center line resistance back here in June and July. And if we just look at this from a simpler view, look, you had this big head and shoulders, right? This was your neckline. We came back, we tested it. I mean, Aussie could be totally screwed, right? Breakdown, 3-wave rally into resistance. I mean, we could be going for a move down to the mid 60s, on this chart. So again, you can't predict anything, right? You just kind of have to look at where the whole idea of charts, in my opinion, has nothing to do with predicting anything. It's about finding solid reward to risk situations, or skewed situations, where you can get into a position or a trade, irrespective of the direction, with a smaller amount of risk than if it goes in your favor, right? So in this case, this is a good example of that. 73.90 to 74.20 would be a resistance. and say you get up there and you turn around and head lower, well, then you can be at break even quickly, and now your money, now you have no risk, right? I mean, there's always some sort of risk. I mean, something insane could happen, and you could get, gapped over on your stop or something like that. But like that's a pretty rare situation. So yeah, that's where my focus is at here with Aussie. Again, 72, 30, 40 bounce, 73.90, call it 74 plus or minus for a resistance. All right. Now, so I just went through Aussie, and we talked about how you have a big bearish setup. Let's look at Kiwi, because this is going to make zero sense the way that I'm talking about this. You have a possible bullish setup here, right? And now one of these is completely wrong, because it's totally unlikely that you're going to have Aussie tank and Kiwi soar. That just is not in the cards. However, today's really important when it comes to Kiwi. So this is the top side, or this is this former resistance line, right? We broke out, we broke above it back in mid-October, and since then we've just kind of pulled back, right? And today, if we can close above this line today, right, that would be a hold, and you would have an opportunity to actually be long Kiwi. However, it is not looking all that great from a hold standpoint here as I look at this midday, right? Because we're currently below it. So trading and all that is a series of if-then statements as well. So if we don't hold this, again, if we don't hold this, then throw this out the window and back to the drawing board with Kiwi and Aussie. Would probably be the one that you want to focus more on as far as a trade, and that would be the downside on a bounce, as noted. But for Kiwi, you've got a good level to pay attention to here. March low, June low, all that, just below, say mid 69s. That's probably a level. If we don't hold this today, that would be a level to pay attention to in the near term, get there and then reassess. All right. Okay, let's go to dollar CAD, which I was totally thrown for a loop on the last couple of days. So like I had it labeled before as with a wave count. We had this 1, 2, 3, 4, and then 5, and especially after we had this big spike here, or on Monday, and we, came on, or I guess that was Tuesday, and then reversed lower. And then look at yesterday. Actually, it got triggered on a short to the tick at 24.59 on that high. Immediately tanked for 2 hours. I was like, oh, great. Went to the gym, came back, and we were up here, and I was like, what's happening? Well, what happened was just wrong. So, but again, was totally confused. So from here, all I'd say is pay attention to 26.50 or so. Okay, you can see that very clearly. That's been a pretty key level at times this year. So again, this is March and April. It was big resistance then. And then you had this day here in early October where we traded up to it and then tanked. So, and then you have this nice little trend line off of July and September lows, which was support for a couple days before we broke. So, I love those confluences of trend lines and horizontal levels and stuff like that. You have multiple kind of methods pointing at the same level is something to pay. Excuse me. As something to pay attention to. So that's, I would pay attention to that 26.50 area. And maybe you pull back some there. Something else, though, that I'll notice if I look out a little bigger picture. So go to a weekly chart here. Okay, so weekly chart. All right. So first of all, that 2017 low, right? We spent a couple weeks below there back in May. Excuse me. And we ripped and we've pulled back, and you see the level that we're trading off of here, this little center line. I do wonder if this is just kind of a bigger base, as in, you know, rally leg, pullback in a three-wave pullback, right? Right, A, B, C. And then if we're headed for two equal legs up, which would be this line, this parallel here, which you can see is huge, right? It's been huge on multiple occasions. And if we did something like that, you could be talking, you know, mid or low 130s. 132.30 would be two equal legs to the upside. And, you know, what's funny is you're kind of seeing this, this possibility, if you want to call it that, fitting with the Aussie chart, right? Because if you're going to get a huge rip in the commodity currency world, right? If you're going to get a huge rip in dollar CAD, you're going to get a huge, you know, tank job in Aussie dollar, then, you know, doesn't necessarily mean that other dollar pairs have to also, you know, get destroyed. However, maybe it's more of a commodity currency thing. I don't know. You know, when I look at, like, and we've looked at these charts like Euro CAD, to me, this is bullish. This is a chart we've been following for a while, starting to maybe get resolution on that today. But you can see here, trend line, right? This little base down here, right? Look at this little base, little head and shoulders action, right? Shoulder, head, shoulder, ding, ding, ding. Right, Euro Aussie, similar. Like, look where we came at from. You're telling me this isn't a huge level? That Euro Aussie chart. Just put a, you know, put a line underneath this week or the low from the last couple of weeks and look across and tell me that that's not a support level, right? Ding, 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 ding. Boom. Even back here, 2010, right? I mean, it's really, really, really big. So I don't know. Upside in Euro commodity crosses, bigger downside in commodity FX in general. Kind of makes sense. Where my head's been at for a little bit. I just kind of didn't execute it properly because I was too focused on the general dollar direction. Sometimes you don't have a general dollar market, right? Sometimes the dollar theme is not there and every currency is kind of doing its own thing. Okay, let's go to dollar yen. All right, so dollar yen has been doing nothing for a while. First of all, we had the channel right back to the lows from March 2020. That channel resistance nailed the high along with highs from 2017 and 2018. And we did put in a big reversal that week. That was like 4 weeks ago. And since then, really nothing. And I don't have anything that I want to do here with dollar yen. For me, if I were to, you know, if I'm looking at this chart and say, where's a spot where I'd want to be buying into an uptrend? First of all, it's not here because we're at resistance, okay? It would be, frankly, it would either be on a break above this, right? As I mentioned before, same idea as that pound dollar chart, right? It would be on a break above and then a pullback to support and all that stuff. It would look something like that, right? Or you'd want to pay attention to these levels down here, these former highs, right? Former resistance, and this parallel, which was resistance itself. That would be a level where you would then want to consider the long side, right? So not here, not here. Here's like no man's land for me, okay? Nothing to do here. Let's take a look at Actually, I'll look at some gold and silver first. So we were coming up here and I thought we were going to pull back a little bit in gold, and we didn't. But what gold's done, gold's broken the downtrend back from August of 2020. Okay. And now you've got a channel, short-term channel, with this center line. Excuse me. Sorry. I've got a cough. I don't think I have COVID though. I just got my booster shot a couple weeks, or no, sorry, last Friday. So I think I'm good there. Anyway, gold, great setup here to buy a pullback if you get it. Former resistance here. You can see I got this at a blue line now, right? Blue buy, red run. So center line, former resistance, right? And this is actually this is great action around center line. This is exactly what you want to see. So former resistance, right? Consolidate around it and then just absolutely surge, right? We call that an energy point. You have lots of energy around median lines and center lines, and the market responds in kind to those levels. So that's going to be the same level as those former highs on the top side of this former resistance line, right? So essentially let's call it 1830s, low 1830s, 1830, 1835 or so. That's where I want to be a buyer. Okay, in gold. This is spot gold, by the way, we're looking at here, not futures. They're usually about the same thing, but as far as price-wise, but there can be differences, of course. So 1830s, next level that I'd be looking at on the upside is going to be probably like 1915, 1920. By the way, this big bold line here, this is 1921. The reason that is in bold is because it's actually the 2011 high all the way over here, right? And it is kind of nutty. The action since then is very, very similar. So I don't know. Who knows? That could even be a sell up there. But for now, just focus on the here and the now. And 1830s to 1920s, kind of the levels that I'm looking at as far as trading. That's a good chunk right there in gold. So, okay, that would be gold. Copper. Been thinking bounce, and it is bouncing, and copper's doing its own thing, man. Like, you're getting a copper hold. You'd think that Aussie wouldn't be trading so crappy, but it is. So yeah, I continue to respect this copper bounce up until like 461, 463, something like that. You've got the high here from July. You've got 618 retrace here. So that's a good spot to pay attention to in terms of resistance for this. If we have put in a bigger top, or we are in a bigger sideways range and we're not just going to the moon, that's where I would expect to see resistance in copper. Crude, and again, also interesting. Crude's held up pretty well. And again, CAD and NOK are really trading terribly. So those have taken, those are doing their own things. We are not seeing that theme market, the macro theme market, which makes it harder to trade, right? And it's super important to realize and to know that these relationships and these correlations, they go in and out, right? Sometimes they're very strong, and you can kind of confirm your ideas, if you will, with other markets, and sometimes they're just not there, which again, this is maybe the theme of today's webinar is, analyze each market based on its own technical merits, right? Don't analyze crude oil to trade dollar CAD. Analyze dollar CAD to trade dollar CAD. Analyze crude oil to trade crude oil. All right, so from here, tough to say. You see this really thick blue line. First of all, we have a huge breakout in crude oil. If you do get a bigger dump at any point in the next weeks, months, whatever, 74-ish is probably going to be huge support, and here's why. Ignore these little black lines over here, but here's the this is back 2008. So this is a very, very well-defined trend line, okay? 2008, 2013, 2014. We paused there in the summer, pulled back, and then we broke out. So if you come back and you tag it, that is now support, okay? Right there. All right. Let's take a look at some crypto. So I'm going to look at Bitcoin and Ethereum right now. The other ones we can look at in the future. I'm still doing some work on some of these others. Also, I'll be getting more into crypto in my own trading as well, which is a good time to tell you, if you don't already know, that Scandinavian capital markets, go to scandinavianmarkets.com, and we've got 100 crypto pairs, right? Not 100 cryptos, 100 crypto pairs. So like you trade against the dollar, the euro, whatever, crypto cross rates, all that good stuff. So check that out. If you want to, go with someone who trades crypto, come to scandinavianmarkets.com, check it out. All right, let's go to Bitcoin first. Okay, let's just go to the daily. These are the levels I'm paying attention to. So we had a reversal here yesterday. Certainly crypto has quote unquote broken out, but guess what? Breakouts fail too sometimes. I have nothing to do right here, but if we do trade up a little higher, you see this red line back to the March 2020 low. That's going to be like 72,000 something or other. Let's see. Whatever, you can put it on your chart and figure it out. It's like 73,000. And then I've got a channel here from the July low, okay? It happens to be the same angle as this longer term red line, which is awesome. But essentially, I want to trade on these lines, on these levels. So 72.5, 73, possible resistance. As I said in my piece last night, I was like, that's why there's nothing to do here, in my opinion. If there is first of all, watch this for support down here, okay? That's 6,000, it's like 60, I don't know, 6,500. If we were to break below it, then again, you'd be looking for this to provide resistance, and then you could try to put on a short, right? It's a very methodical way to trade when you have these levels, and you can see why, if you broke this, you'd be looking for this to provide resistance, because it was support. In fact, it was like perfect support, right? Several times, right here, okay? Right here. So again, these are the levels to pay attention to. You can draw them on your chart and you'll have them. And this is, by the way, log scale. That's kind of important, right? This is arithmetic scale. It looks a little different, doesn't it? So yeah, when you're looking at crypto, especially look at log, because the percentage changes are significant. They're huge. And if you look at arithmetic, your charts are going to look all kinds of wild, right? There's a going between, 1,000, 2,000 is not the same as going between 60,000 and 61,000. All right, let's look at Ethereum. Okay, so here is, again, back to March 2020. We've got a channel here. And within these channel lines, we've also got extensions. The extension actually nailed the top back here. We broke out. And this is a much more bullish looking chart to me than Bitcoin is, by the way. You've got a clear breakout, clear angle is all hell. And you see the center line here, right? The center line is the thick black line. resistance, resistance. You see the surge. That, again, we talked about energy points around center lines. Okay, it was crash support back here in May. Resistance, 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 support, support, right? Support, resistance. So that's going to be like 5,060 or so, and that is going to be proposed resistance. So again, it's very hard for me, again, the way I do things, and everyone's different, but it's hard for me to be long into this. I like to buy the pullbacks and the support, go in my direction immediately, and then I'm home free. Okay. The big setup here, and this is an if you get it, okay, is if we get a drop at some point, say over the next couple of weeks or whatever, back into the top side of this line here, this blue line, right? That is your, call it breakout level. This would be your retest level. It's also, you'd also have this bigger support line here. That's where you would want to be getting involved, in my opinion. Okay? All right. Are there any questions? I have gone over all the markets that I have to look at today. Again, a lot of if-then statements out there, right? Don't have super strong views right now. Frankly, I've been a little confused, right? And just think about the dollar charts we just looked at. Like US dollar, that index is at a huge level of resistance possible, right? Yet Aussie looks like crap. CAD doesn't look great, even though 2650 could be a level. Dollar yen, not real sure. Cable coming in, euro and cable coming in on bounce levels, but like that's it. And if they break those levels, watch out. You've got other European currencies, dollar Swiss, dollar SEK, dollar NOK, all look really bullish. You can make very bullish arguments there. Yeah. Frankly, the cleanest chart out there right now for me is probably gold, right? That gold chart is super clean. Clear breakout, clear support to buy, right? And, you know, a decent level to target on a near-term swing basis. Other than that, there's not a whole lot for me to feel all that comfortable about. And I'm sure there's some people out there who have, you know, have the tiger by the tail. I'm sure that they have, you know, they know exactly what's going on right now. But that's how I felt for much of this year. And right now, I just don't have that. That can change very quickly. Right? Sometimes you get, you know, a week or two clears up price action. All of a sudden, everything falls into line again. But right now, little hazy for me. So anyway, that is it. I hope these charts do help you. I hope you enjoyed them. And I will be back with you probably next week for another edition of FX Power Hour. And again, this is Jamie Saettele of SB Trade Desk and Scandinavian Capital Markets. That is sbtradedesk.com and Scandinavian Markets. And I will talk to you next week. Take care. All right, bye.